Hello, everyone. Welcome to Global PropTech Online number 8. Before we get started with our next keynote presenter, a few housekeeping things. So if you have any technical issues or questions, please go to the sessions button on your left-hand side. In there, you will see the help desk, and they will help you with any of the technical issues that you have. Also, during the presentation, if you have any comments or questions for the speaker, please write them in the chat box on your right-hand side. We'll be looking through the questions as you put them in and collect them, and we'll go through and answer them at the end of the presentation. Also, this presentation, like the ones before, are being recorded and will be made available for on-demand viewing on our YouTube channel afterwards. Please stay tuned and watch for the announcement that those have been released. And now I'd like to introduce our next keynote speaker, Miguel Nigorra, who's the head of Strategic Ventures Europe for Fitwall. Miguel, over to you.
Hi there. Thank you. And great to be here. Let's try to make this as interactive as possible. So feel free to, as Derek said, ask questions on the chat box. I'm going to quickly project my screen as I will be sharing a few slides with everyone today. Great. So hopefully you should be seeing my screen now. As Derek said, my name is Miguel Nigorra. I am head of Europe for our strategic ventures team at Fitwall, where me and my team drive innovation and value creation transformations with our corporate partners in Europe. Therefore, today, I wanted to focus the presentation on explaining a bit better, really quickly, what is the Fitwall and our model for those of you on the event that might not know what we do. But most importantly, to focus on what are the most important trends and advice we are sharing with our real estate corporate partners today. So really quickly on what is Fitwall. Founded in 2016 and based in Los Angeles in California, Fitwall is the largest venture capital firm focused on technology-driven innovation for the global real estate industry. We opened our European presence out of London at the beginning of 2019 and have been since then been working with our corporate partners and with startups and companies on the PropTech market in Europe too. And Fitwall connects many of the world's largest owners and operators of real estate with the entrepreneurs who are redefining the future of the built world. Fitwall is today the dominant real estate venture investor, and what makes our model different and unique is our scale and track record to date. We have raised 60% of all real estate venture capital raised to date. We have right now over 1.2 billion in assets under management, and we are around 6 times larger than the next largest PropTech manager, if you wish, in the space. We have developed a consortium of real estate corporate LPs from every major geography, which provides us an unmatched distribution for the companies we invest in. We are backed by a global mix of more than 60 investors. We're showing a few in the screen from 14 countries today, which represents around 130,000 US single-family homes, around 1.7 million of total multi-family units, or 7.3 billion square feet of office and retail space managed by our LPs. Fitwall LPs span all sectors of real estate in North America, Europe, and Asia, including single-family, multi-family, office, retail, hospitality, industrial logistics, brokerage, and financial services. And this network of corporate partners creates a sustainable strategic and information advantage for us and allows us to understand what are the property technology trends that are impacting real estate with a global perspective. Therefore, because of the model we have built and the regular interactions we have with our corporate partners, we have been able to develop what we call intellectual economies of scale, which is a fancy term to refer to the ability to understand existing trends in the market and have a view on what are the corporate needs regarding tech and innovation. So what we thought we'd do today is to take a look back at what have been the major trends in PropTech for this year and how they have affected corporates, and also try to make some predictions and give some advice for 2021. So starting by looking at what happened in 2020, the first trend to highlight is the slowdown in global investment activity and the reduction of new PropTech companies being formed. PropTech funding in 2020 is projected to be at around 8 billion for the end of the year, which is around a 40% decline from 2019. The majority of the pullback was actually reflected in the first half of the year for obvious reasons. However, funding is bouncing back in Q3 and Q4, and therefore we predict that funding will completely bounce back in 2021 to around 15 billion or so of capital being deployed. In Europe, however, there is a slightly different picture. We are at around 2 billion euros, which is more or less the same level at 2019 in terms of capital deployed and also in terms of the number of deals, with between 250 to 300 companies founded in investment rounds and an average deal of, let's say, 7 to 8 million euros, right? So we haven't really seen a reduction in the amount of total capital deployed in Europe for this year. We saw it in Q2, but then Q3 and Q4 overcompensated for that. The second trend to note is that it's industry consolidation. Consolidation continued at a steady pace in 2020, and much like the real estate space, the value buys won't likely reveal themselves until mid-2021, as embedded VCs tend to put good money after bad, and new investors become more discerning, if you wish. There's a few dynamics and deals to highlight. The first one is consolidation to try to expand product capabilities. A good example of that could be Compass, that acquired Modius, entering the title and escrow space. The second trend is moves directed to absorb competitors. It could be the case of Eden, one of our portfolio companies that acquired Managed by Q, which was pretty much their only competitor in the space. The third trend could be reinforce the core, which is could be highlighted with another portfolio company of Fitwall, which is Hippo, that acquired Spinnaker Insurance, the largest carrier partner. And then also moves to try to enter new asset classes or new business lines for existing companies, right? A few examples could be CoStar, that acquired 10X, a commercial transaction marketplace, RentPath, an apartment listing site, and HomeSnap, which is an app for residential real estate agents. In Europe, it is also interesting to highlight Autodesk acquiring Spacemaker, for example. The third macro trend, looking back at 2020, was the increased interest and acceleration of PropTech adoption and innovation by corporates. After a few years of, let's say, stop and go, corporate interest in PropTech across every asset class has been tremendous since COVID first began. As Fitwall, we've been and worked closely on a number of strategic engagements, ranging the full spectrum of tech, including software, hardware, marketplaces, fintech, robotics, a bit of everything. To give you a sense of corporate demand and activity, in Q4 alone, Fitwall team made over 200 strategic introductions on behalf of our portfolio companies or corporate partners, which is way more activity than what we usually do per quarter. The fourth trend to note is that innovation will be investment-led. What we mean by that is that we continue to find that innovation investment in both tech and organizational infrastructure is key, helping better align interest and sending stronger signals to the teams and accelerating decision-making at corporates to come to conclusions faster. We continue to see that the best outcomes in the market are where corporates invest alongside their technology efforts, right? In other words, not only focusing on their strategic value by adopting tech, but also focusing on increasing the ROI by investing in tech. Examples of PropTech deals with a strategic participation could include Procore, a state's title by Lennar, Notarized by First American, Coded in Europe by NREP, or Samper or DealPath by Blackstone. And then finally, we see very interesting alternative sources of financing continuing to enter the space. From corporates like Amazon investing on smart rent, for example, a very interesting trend of OpCo-PropCo deals. A few examples here could be self-storage with Clatter, short-term leases with Advanced Stay, or co-living opportunities with Common or Star City. But also SPACs, right? SPAC is probably the most promising trend for the year in terms of alternative sources of financing. There has been 201 SPACs that gone public in 2020, raising a total of 70 billion. That compares with 59 and 14 billion for 2019, so about 6 times more. What is interesting to note is that of the 201 SPACs that have gone public in 2020, 174 are still searching for a target, 22 have announced transactions, and only 5 have completed business combinations, right? So a lot of activity and news expected on the space. And then there is obviously a few IPOs like Lemonade, the insurtech company, which is probably one of the highest performing IPOs of 2020. So in summary, the pandemic has forced a once-in-a-generation shift at all levels of the real estate value chain. As tenants and owners rethink space, density, and their business models and requirements. So therefore, technology has been proven to be key to real estate. We believe that a well-defined technology and innovation strategy that not only allows you to survive the current market environment, but thrive in the aftermath, has evolved from being a nice-to-have to a must-have for real estate organizations. So we want to look now at 2021. And as real estate organizations seek ways to emerge from COVID, and we all go back to the new normal, hopefully with the new vaccines. Today in London, in the UK, we had the first person vaccinated. So that's obviously great news. So as I was saying, as we transition back to normality, real estate will require a greater use of tech and different ways of thinking than pre-COVID or before the pandemic, right? It is always hard to make predictions. But I guess here is our top 5 of what real estate corporates need to take into account and will differentiate good from great. The first thing to say is that there is no real asset class that is safe. The dramatic effects that we've seen with retail and e-commerce, obviously accelerated by COVID, should be a warning to every asset class that no one is immune to disruption. Enabling technology innovations will be critical across all asset classes, really. And the same trends that we're currently seeing in retail or hospitality or office are not going to remain stagnant and will influence every asset class and real estate activity, both positively and negatively, by the way. The second trend is the notion that asset class differences, if you wish, or asset class business models are starting to become a bit more blurry. And while, as I said, we expect the world to go back to relative normal post-COVID, the pandemic has revealed new ways, enabled by tech or innovation in some cases, to articulate different types of spaces almost anywhere, right? A few examples could be an office can be articulated right now in a hotel or at home. Retail spaces are becoming fulfillment centers, and hotels are finding new revenue opportunities by becoming ghost kitchens in some cases and using underutilized spaces within the building. This is obviously a threat, but it's also a great opportunity for corporates to think about repositioning and monetizing assets in different ways. The third trend to highlight for 2021 is that the pace of digital innovation and transformation will only increase. So we think that anyone that is not already participating on the real estate industry, they are late. Real estate business models are not intrinsically designed for innovation and tech adoption, then that's a reality. But leaders are evolving quickly. Businesses that once mapped digital strategy in 1 to 3 years increments and took 12 to 18 months to implement initiatives are now scaling their initiatives in a matter of months, and in some cases even weeks. We're seeing technology being deployed at portfolio levels now in weeks rather than years, if you wish, before, right? And most corporates now have also internal teams that are constantly looking at tech and innovation full-time. So what that means is that leadership teams not only need to learn quickly what is and what is not working for them, but understand exactly why. So choosing the right technology is only 50% of what you need to do. Implementing that technology well is the remaining 50%. And doing that requires identifying and learning about unknown elements as quickly as they appear and have the organizational flexibility to evaluate, adjust, and execute and change strategies in real time. Also, there is a component of innovation decision-making, if you wish, that is shifting dramatically. We're seeing the leaders change the way their businesses work to build in innovation into everyday activities on things like deal underwriting, leasing, asset management, facility management, etc., and commit to strategies that are pretty much reinventing their business models, but also committing time, resources, and most importantly, capital into the strategies they are putting in place. The fourth trend / advice for 2021 will be disrupt yourself before the new trend does it, right? This year, we've seen COVID, tech, e-commerce, climate, consumer sentiment all changing, and that will continue to be the case. So multiple trends will impact real estate in the future, and therefore, more important than trying to predict what the next big trend will be, it is to be able to understand the impact and evaluate new ways to create business opportunities and self-disrupt as fast as possible as these trends materialize. Corporates, we're seeing corporates reevaluating their operating models and also looking at ways to implement tech to improve their long-term business strategies, which has increased the interest for certain startups out there. And we tend to say that if you're not investing, you're probably leaving ROI on the table right now. And then lastly, this is something that we tell to our LPs all the time, which is stop building PropTech in a vacuum. What we mean by that is that we've encountered continuing challenges with a build-only approach, as corporates are not always ready to develop internal solutions that can compete with what PropTech companies in the space are doing and with a huge amount of VC money entering the space, right? We tend to say that corporates should think at venture capital PropTech money as free R&D for them that they can basically tap into. Therefore, corporate tech innovation should need to be complemented with a build, buy, partner, invest strategy, and focus on building an ecosystem of companies that it's key to succeed in doing that. So all in all, and before we jump to Q&A and ask concrete questions, we believe that 2021 will be a great year for PropTech overall. We're pretty excited about all markets, if I'm honest, and the value of corporate innovation and adoption and how these continue to drive the market forward, both in terms of strategic partnerships, but also in terms of strategic investing coming to the market. So in other words, adopting tech, but also deploying dollars and supporting companies in the space. And we believe that strategic partnerships will probably be the right way to go about it, and that will create great business opportunities for the industry. So with that, I realized I've been speaking for the 20 minutes that I was given. So I would love to open the conversation now to get questions from the audience.
Thank you for that, Miguel. Please, attendees, if you have any questions or comments for Miguel, please write them in the Q&A box, the chat box on your right-hand side. We'll give a couple of minutes for any attendees to write their questions in there. One question I did have for you, Miguel, listening to your presentation, is you mentioned that in this past you saw a relatively higher instance of introduction activities between technology companies and your your LPs than what you usually see in the quarter. And I'm curious which side was driving those introductions mostly. Was it the corporates who are looking to learn more about what's going on and what's out there and what might be applicable to them, or was it coming from the other side?
So it's actually both. So I will comment on, I guess, the differences or what was driving activity on both ends. So starting on the corporate side, what we saw is that around March, or from March to May, June, obviously everyone was heads down trying to solve their businesses and operational needs in order to adapt to the new normal. But then corporates quickly realized that tech could help on a lot of the things they were trying to do, right? From things like cleaning robots to air quality technologies, to a bit later in the year, realizing that the consumption and cost of running buildings with no people in some cases was still high. So they wanted to understand where that was coming from and try to adopt technologies that will help with operational efficiency and better management of assets, right? There was also a lot of great opportunities being created as the year evolved, in some cases responding to threats, like, as I said, fulfillment centers in retail spaces, but also great opportunities for people on other asset classes or with other business models, right? So what we saw is that corporates focused at the beginning of tech that helped with the new normal. Then they realized that basically there were great business opportunities out there. So they wanted to connect to new companies. They wanted to connect to entrepreneurs. They wanted to know what was going on in other parts of the world. So it was not only connecting with startups, but also connecting with other corporates that were going through similar problems and difficulties. And people were more open than ever to innovation. And then I would probably say that recently in Q4, as people start defining their priorities and their initiatives for 2021, everyone is building what I describe as an ecosystem of initiatives that result, therefore, in an ecosystem of companies they want to talk to, right? So we've made a lot of introductions. Honestly, like we track something like 75, probably I'm mistaken, but like vertical themes in PropTech right now. And I won't like I say that there's not been a single vertical theme where we haven't seen LPs or some LPs being interested in explore, right? Across everything in tech. So that's on the corporate side. On the startup side, I think that startups are realizing that there is a herd mentality in real estate, right? And what I mean by that is that there is a few players that are really key in driving adoption, and that strategic partnerships beyond capital deployments, right? Beyond the initial investment or being part of the capital table, produce two things. The first one is the ability to do portfolio deals, therefore creating efficiencies at the go-to-market level and significant business opportunities, right? If you can go to one big real estate player and you can sign a portfolio deal, then it basically equals like 10 smaller deals you might do elsewhere. But also they're seeing corporate and strategic deals as a great way to basically test and evolve the technology, right? At the end of the day, most of the PropTech solutions out there right now require a physical asset to be able to deploy and to innovate and to grow the product. So that corporate feedback and that ability to grow with a partner, it's great for entrepreneurs, right? And we've seen our portfolio companies asking for introductions across asset classes and across LP types, if you wish. The other thing to note is that obviously there is people that is being negatively impacted by the crisis or by this market situation, but there's a lot of startups that are actually doing great, right? And they managed to raise a lot of capital. They are growing fast. They are thinking about consolidating and acquiring competitors or growing to new business lines. So there is a huge amount of growth also happening in the market. So that has also driven a lot of the introductions, either companies shifting to new markets or new business lines or thinking about new use cases for their products.
Yeah, nice for that. And then just for the audience that we have here as well, can you talk a little bit about the areas within corporate real estate that you're seeing the most interest being driven from? So is it coming from the office segment or the retail, the industrial, something like that?
Yeah, so I'll say that there is basically interest and trends happening, if you wish, across asset classes, right? I will say that most of the innovation in terms of top investment rounds, if you wish, are coming from three areas. The first one being industrial and logistics. So there's a huge amount of transformation happening at the supply chain level and logistics level. So we see a lot of great companies and a lot of interest. Actually, I know the figures for Europe well, not that well for the US, but for Europe, 5 out of the 10 largest rounds of PropTech in 2020 were on the industrial and logistics space, right? The next trend is obviously residential and multifamily. So everything that is happening on the residential space, from fintech to insurtech to pretty much any technology that is impacting the way people buy and sell a house and the way that residential asset classes are managed by corporate partners, it's also becoming very, very relevant. And then I will say that what we call smart building tech, that could mean different things across asset classes and could be defined as broad as you wish, let's say. It's also very, very relevant. We're seeing multiple point solutions emerging, anything from biometric access control, tenant engagement and ways to better communicate with tenants, energy efficiency, digital twins, building management systems. Like I could probably provide a lot of examples, but anything happening on the smart building technology, it's also very promising. And then the last trend, or the fourth trend, which I think it's also very relevant, it's sustainability, right? Real estate consumes, and I'm sure by now pretty much everyone on the phone will know this stat, is that 40% of the carbon emissions in a year and around 30% of the total resources are consumed by real estate. So the minute that the community and the world basically wakes up to this fact, it will create a big impact on real estate profitability for landlords. So there is obviously a huge amount of companies that know that, and there are working and helping real estate corporates to become carbon neutral and to have a more sustainable day-to-day operations, if you wish.
Perfect. Well, we're almost at the time right now. I think there's no questions that have come through in the chat. So I'd say let's take this discussion over to the sessions, the breakout sessions area. And please, if there's anyone attending here who would like to connect with Miguel and chat with him or ask him a question, head over to the sessions, look for his name, and go in there. He'll be there for 5 to 10 minutes or so to chat with you, answer your questions. Thank you, Miguel, so much for your time this afternoon. Great presentation.